Let's talk about money. Money's fun to talk about. Everybody has money issues of varying degrees. What money issues are important to our constituency, our friends in the state of Wisconsin and in the upper Midwest? What about our veterans and military families? Money has taken on, oh, look at that. I got an echo going on now and everything. I'm Bush League. Whew. I wish I could have prevented that echo before it happened, but I didn't move fast enough. Ouch. Pretend that didn't happen. Hey, friends, money has taken on kind of a different meaning. Are you saving differently now in the face of COVID and the pandemic? Are you spending differently now? Maybe some of you were on unemployment. Some of you were furloughed. Has your idea of money and investing in your future changed? There's some important considerations for all of you, business owners, veteran or not. The climate, the world has changed. As far as money is concerned, it's really important that we have an expert come tell you all about the things that you need to be thinking about, all those veteran money tips that are going to save you money and help you invest in your future. And that's exactly what we're going to do today. I'm pretty pumped about it. My name's Adam. I'm with the Wisconsin Veterans Chamber of Commerce. So happy that you're joining us. Let's talk about some money. Yeah. Let's get rich. Let's invest in our future. We're going to talk about money right after this. Motivated, ready to rock. You know what? You don't want to hear me talk about money. We brought in an expert to talk about all those considerations that may have changed, or maybe considerations that you hadn't thought of, COVID or not, pandemic or not. Because at some point that the pandemic's going to be behind us. We got to get back to normal somehow. So brought in our very good friend, Brett Heaton Juarez, to come chat about money. And here he is. Brett, how are you, my friend?
I am energized after that intro.
I dove right into the deep end and was like, let's talk about money. And then hadn't thought about anything I was going to say after that. So I just kind of rambled and left a lot of space. But Brett, how are you, man?
I'm great. I made a cup of coffee. I just felt like office hours,
I got coffee too.
So I did that. And yeah, I'm happy to be here. And
so
go ahead.
Go ahead.
Well, money comes with a lot of baggage.
Yeah,
so I'm glad to hear you talk about it in a way that opens the door, because probably the biggest issue that we have, like maybe other issues in our personal lives or business, professional lives, is like if we don't talk about it, it's not going away. So we just got to start a conversation and figure out what makes sense. Where do I begin?
That's a really good point. You say with money comes baggage. They say, more money, more problems. I just want to draw attention to this graph that I drew up here, or this table. This is stressors.
Okay.
This is money.
Mm-hmm.
And in pink, that's your time and the amount of control that you have over time. So obviously not having any money leads to heightened stressors.
Sure.
Right. Having lots of money also leads to heightened stressors. But there is a period where having the right amount of money, this is the theory that I'm working on here. It's a working theory where you want to be is where the amount of money you have alleviates money-related stressors and then aligns with giving you the optimal amount of time and control over what you do with your life. So that's my working theory. Is that crazy?
I think that's spot on.
I should write a book on this.
I'm writing a book on that.
Are you really? Man. It's trademarked. I trademarked it already. So Brett, before we dive in, tell us a bit about yourself. How are you? Sure. How are you the money guy? Why should we listen to you talk about money?
Yeah. So I grew up, uh, I was blessed to grow up not feeling super wealthy
Hmm.
or not feeling super desperate, hanging on by a thread. So I
Okay.
do feel like my childhood experience was kind of in that sweet spot on your graph. And then when I got to adulthood, I realized I didn't have a clue on how these systems work, right? Because like you're thrown into the adult world and you're expected to read these statements. You're like, what the hell does that say? I don't, nobody
Mm.
taught me that in school. And so I made some mistakes in my 20s, or at least some oversights. And
Same.
yep, yep, we're not alone.
Yeah.
And and so then when I was asked to be a financial planner, and at first I was like, oh, I have to wear a suit and work downtown. At the time, I was in youth work, nonprofit work. I'm a
Oh, were
teacher.
you really?
Yeah, I'm a teacher by trade.
What nonprofit? Are you serving nonprofit? Which ones you work for?
Yeah, at the time it's called Lake Valley Camp. Now it's called the Peak Initiative.
Okay, very
Yeah,
cool.
so they're right in kind of midtown, like
Hmm.
Avenues West area.
Hmm.
So what I realized is that an expert is not a good teacher, at least
Hmm.
not if they talk to you as an expert. So if you have this experience of, well, I really should try to, get my act together or whatever, and you start Googling expert articles, or, someone comes in and talks, it feels dry, feels
Mm.
removed.
Hmm.
The conversation's got to be embedded in our values and our priorities, because money is an expression of energy, right?
Ooh, hold on, hold on. Let's let that hang in the air for just a minute.
Yeah,
Money is an expression of energy.
yeah.
I love it. Okay. Expand
So
upon that. That's beautiful.
yeah, so put another way, money is not the root of all evil. Money can do a lot of productive things for our families, for anybody.
Hmm.
The love, the love of money itself as an end to itself probably is.
Mm-hmm.
So I think on the upside of your graph, when people start to get stressed about it, it's because they're losing sight of the fact, like, hey, wait a minute, I have a lot, I'm doing well.
Mm.
I need to chill out, because they're focused on kind of winning the game, so to speak.
Yep. Absolutely.
Hmm.
So you have been a financial planner for a long time, and you've seen it all. You've
Yep.
seen the ups and downs. You've been a financial planner through all sorts of things, through recessions
Yeah.
and, you know, borderline depressions and pandemics and whatnot. How has the money world changed? And before you answer that, I just want to say
Mhm.
to everybody that's watching, if you have questions about money, throw them in the comments, whether you're watching on
Sure.
Facebook, LinkedIn, YouTube, or Twitch. Throw them in the comments, and I will make sure that Brett gets an opportunity to answer them for you. Anything about money, saving, investment, retirement, whatever, it doesn't matter. This guy's a pro. So you
Mhm.
have questions about money. A lot of people in our generation and older and younger, heck,
Yeah.
a lot of people have money questions. We are taught how to do long form geometry. We can
Yeah.
we leave high school and we know how to find a hypotenuse, but we don't know how to a mortgage works. Okay, you're not alone. I get it. Okay, so let's ask your money questions. Don't be bashful. But Brett, how has the money world changed? How are the things that people need to consider? How has that changed, at least since you've been doing this?
Sure. Um, so I've been doing this for 7 years.
Nice.
Um, the pandemic is a perfect example of the exchange of energy, right?
Mm.
So the reason the stock market tanked is because things were shut down. So we're not going out to eat. Restaurant owners aren't getting paid. People aren't getting tips. We're not spending money. Like my spending is your earning, and vice
Right.
versa. We're all connected. So that was pretty drastic. Now, the conversation that I had over and over and over again in March of April of last year was, what should I be doing about my investments? Like whether there's $1,000 or 100,000, same question. And the thing about investing, whether you're talking about, Coinbase, crypto, or anything is
Mhm.
what is the money for, and when do you need it? So everyone, when it comes to investing, everyone wants to talk about the rate of return. How's it doing? Right?
Mm.
Like, I have a YouTube channel. I'm a genius because I guessed these trades and I made $1 million, and you can too. But then the disclaimer says, don't do what I did. There's no guarantee of results, right? So, so we got that model, right? um, so, so to answer your question with the pandemic, it's like, well, do you need the money now? If the answer is no, then you shouldn't change anything. Like, if it's your retirement account, when are you going to retire? 20 years. Okay. Do you think that things will get better within 20 years? Boy, I hope so. Okay, well then don't change anything, right?
Yeah, if it was a good strategy when you entered into it, the pandemic hasn't changed the fact that it was a good strategy, and you should just continue to invest.
hmm Yeah, I mean, it was big. Don't get me wrong. And in my experience, talking with lots of individual clients and small businesses, is that the ability to pivot, as the chamber has done. I mean, certain businesses and sectors have done phenomenally well, and others have really been struggling.
Mm-hmm.
Um, so crises like this tend to accelerate changes that are already happening. You know.
Right.
Um,
What are
so
some of
yeah.
those changes?
Well, um, I pull into the Target drive up, and someone brings out my bags, my stuff. I
Right.
don't think we're ever going back,
I think you might be
because
right.
they've
Curbside pickup
set it
is going
up.
to be a thing forever.
It,
You think?
yep, yep. They figured it out. They were trial and error, and now it's there. It's like, Steve Jobs famously said, with the iPhone and technology, is like, no one's asking for it, but like, once they have it, there's no going back.
That's a really valid point. How
So
interesting. Now
yeah,
you mentioned crypto, and we don't have to
sure,
get into a conversation about that if you don't
sure.
want.
No, no.
Um, are you familiar with? I mean, everybody's talking about it. I
hmm
mean, it's getting a lot of buzz, very similar to how it was
Yeah.
3 years ago when there was the Bitcoin,
Yep.
2.5 years ago, I think it was, when they had Bitcoin was exploding and got to 20,000 and then promptly died. And then, now everything's happening again. For those that don't understand what the heck cryptocurrency even is or means, is that something that you can explain to them at a base level? And what does it mean to them as an investor?
I'll explain it at a base level because I only understand it at a base level.
Same. I have no idea.
And I think,
That's something to do with computers, right?
sure, 99.9% of people don't really get it. Like, I listened to a podcast on it, and I was like, yeah, I still don't really get it.
Mm,
So here's what I would say the public at large should know. Um, when there is a higher potential return, there is a greater risk of losing. Okay. So crypto has a higher potential return than your traditional mutual funds and your, boring retirement account. It also has a much higher risk of going down and staying down.
sure.
To illustrate that point, a lot of, I'm a member of the chamber. A lot of other people, maybe listening, are. If you start your own business, it's a huge risk,
Right.
right? A lot of business owners don't make it, but if you do, then you'll love your job. You'll have passive income. You'll have lots of, like, it's a risk return trade off versus I'm gonna be a you know I don't want to disparage any particular job, but like, I'm gonna deliver the mail, and I'm gonna do it the same way every day. I know what my
Mhm.
benefits are. I just have a path, and that's it. Um, Crypto uses blockchain technology, and it is not connected to any government currency. So that kind of decentralization or separation from the US dollar, which
Mhm.
all other investments are basically based on, that's the best and worst thing about it. It's the best thing because new tech is exciting, right? Like it's it's breaking up a monopoly, some would say.
Right.
On the other hand, because it's not regulated, it's it's getting a lot of traction like on the dark web and terrorist funding, like because it's so hard to trace. So the risk to an investor is that the federal government hasn't exactly weighed in on the fate of crypto yet.
Yeah, they're still trying to figure it out, which
Still
means,
trying to figure it out.
it'll take
And,
them 20 years
well,
to,
right.
yeah.
I always laugh when you see like a clip of C-SPAN or something, and everyone in Congress is like writing on notebooks, and like these people are regulating the tech sector. It's like I mean, understand there's wisdom and all that, but
Yeah, it's interesting and it's important for people to understand this isn't a typical risk reward or even a high risk, high reward. This is a high risk,
sure.
potentially high reward, but this is not FDIC insured. This is not something that, a cryptocurrency could technically fold or somebody could completely clean it out and disappear and everything is gone. I mean, they have securities in place to prevent that from happening, but I mean, there's
Mhm.
no protections in place, so you never know. But I think a lot of people are taking advantage of that and making money. So if somebody's
Yeah.
looking at saying like, I need to make some money, I need to accelerate my investments and whatnot, and they're
Mhm.
excited about learning more about crypto, is your advice like, yeah, give it a shot? Or like, dude, if you want to continue to make money, just slow and steady,
Um,
stay the course.
yeah. The behavior is the number one predictor of solid investing,
Hmm.
meaning that you want to finish what you start. So so the person who says, oh, I'm gonna buy crypto, but then it goes down and they're like, oh, well, that was a bad idea. I'm gonna sell. No, they didn't follow through.
Hmm.
And we're all subject to those because it's our money,
Right.
right? So I think any investment, including crypto, the odds are in your favor. You go to
If
Potawatomi.
you can
Yeah, right,
stick
right.
it
So you
out.
go right. So you go to Potawatomi, the odds are not in your favor. There's a risk. The risk is that you drop $100 or whatever you're playing with, and you leave with nothing. But the
Hmm.
reward is a lot. So crypto's not like that. It's probably fine. It's just you have to know, like, this is why everything's connected. Is your cash flow makes you a better investor. A non-starter for me, if someone says I'm trying to make more money, well, crypto's not the way to do it. Crypto's the way to grow your net worth,
Hmm.
but not to create income for yourself because you can't predict how it's going to perform in June or August or whatever it is. Um, so, I mean, I talk a lot about cash flow with clients because
Hmm.
if your bases are covered, then you're not going to panic when your investments drop, or you're not going to be euphoric when they go really high. Like, oh, crypto's awesome. I want more because that happens too.
In your estimation, is crypto one of those things that is not going anywhere?
I am not an expert. I don't think it's going anywhere. I think it's gained enough traction. Some big players have started to accept payment.
There are NFL players that are getting paid in Bitcoin now, like,
Yeah,
or
yeah,
trying to at least.
right, right. Yeah, yeah, and that doesn't make a lot of sense to me because why wouldn't you just take cash and then put it in crypto? That
Yeah,
seems
and
like
then put part of it,
but
yeah. Who knows?
like, yeah, who knows?
They know
Uh,
more about that than I do.
hmm.
So, as far as the veteran and military family community is concerned, you've been very involved, with the chamber and with the veteran community.
Hmm.
I just kind of want to change gears a little bit and get
Sure.
a little more focused on that community now.
Mhm.
Um, Obviously, the pandemic has impacted different demographics in different ways. The veteran community is no exception. What kind of issues, pandemic aside, what kind of money-related issues do you see typically afflicting military and veteran families, and what general tips? Obviously, this isn't financial advice,
Right.
yeah, we have to put this disclaimer out there where you're not getting direct financial advice, so don't sue anybody. But what advice, what issues do you see in the veteran military family community typically in your work with them, and what tips or tricks would you maybe have, things for them to be aware of?
Sure. Sure. Yeah, and it varies. It's worth repeating. Like, if you have questions, like, you can chat, and we can give you personal advice, or someone on our team can. Like, that's what we do. That's our day job. A couple things I've seen multiple times. One is that one of the best benefits available to the veteran community is the VA home loan.
Mm.
Uh,
And that's
it's
recently changed too, hasn't it?
hmm,
I believe I've heard. Well, you
yeah,
continue.
yeah. I'm not sure if it's changed. Maybe it has.
I think they reduced the amount of service days needed to
Oh, great.
qualify for a VA home
Right.
loan, which then which doesn't really apply to active duty folks, because if it
Mhm.
goes from 180 to 90 days, it's like whatever, I do that in half a year. But it really changes the game for Guard Reserve folks,
Right.
because those are active full days, switching
Right.
from, and I'll have to look up what the exact numbers are, but more people, my understanding, are now eligible for VA home loans. But yeah, so
Yeah.
tell us about the VA home loan. How's that a huge benefit?
Well, so one I think a common, it's like, well, should I buy a house? Yes or no? I mean, a lot of people are really focused on that, and also it's a big decision, right?
Hmm.
The VA home loan is such a good deal, and the rules are such that you can close with a home as a primary residence, or even a duplex in Milwaukee where you're living in one unit and renting the other. The kind of classic Milwaukee area duplex is one of the best investments I've seen, because you're getting rental income that covers your mortgage.
Mm,
So basically, yeah, okay, you got to fix the boiler or whatever, but you're there for free, or a net zero, and then you pay off the mortgage over time. And whenever you're done, you have an asset that's worth a few $100,000, and then you can take that few 100,000, that if you sell, that comes back to you tax free up to a certain point. It's up to 250 grand, right? And housing, I mean, homes, like land, is a finite resource. So when we
right.
talk about real estate, what appreciates in the tax code is actually the land. Like, that's the value. It's like, yeah, you got to fix up a house or whatever. So that's huge. You also avoid the private mortgage insurance, because you can get in with less money down, like 3.5%. So that's a big one. Another thing I've seen is, when you're in the service, or from years past, like, you're in the TSP, the Thrift Savings Plan,
Hmm.
and because a lot of times people enroll when they're not thinking about it or don't care, there's
They're
money in
just told by their first president, like, sign up for this.
exactly right. Like, yeah,
Yeah.
okay, great. So then it's like, oh, I must have something there. I have no idea what it is. Now, in in which is like, okay, well, great. I mean, I'm glad you didn't, like, cash it out, but we got to find out. So the rule of 72 applies to kind of, frankly, any investment, but the rule of 72 says that if you get a 7.2% average return, which is typical
Hmm.
in your kind of classic bread and butter investing, your money will double in 10 years. Meaning, if someone had 10 grand in their TSP, and then they forgot about it for 10 years, if it's invested, it would be 20. It's a lot of money.
Right.
What I see sometimes is that it's not invested. It's in the safest fund, the cash fund, and it's, 10,300.
Ouch.
And that's just if someone would have told you, if you would have checked. Like, another thing that I've talked with Saul, the executive director of the chamber, about is access to credit. So Active duty. My brother-in-law is active duty. My wife was a reservist, and like because your existence is dictated, you're moving around, you're being stationed here and there. Credit score has a lot to do with stability, and the military lifestyle is inherently unstable.
Unstable, correct.
Right. So you come out, someone wants to, get a loan, like business loan or whatever. So one thing that you could do is start early with a credit counseling. There are nonprofits that do credit counseling, or even just have a credit card. I can send some info to the attendees on how the credit score is calculated, but it has a lot to do with just paying your bills on time. And I think for veterans or anyone who's faced danger or hardship, that random piece of paper in the mail is like, God, who cares about that, right? Financially, these things do matter because, like I've heard people say, I'm just going to skip my taxes. Well, they didn't catch me. Well, they just don't care yet. There's just not enough there to come after you yet.
They know what you know.
Yeah, right.
They'll catch up with you.
Yeah.
We got a good question from Joshua here. He said, I really wish it was more straightforward to transfer TSP into a 401k after separation. Don't you don't have your account information? Well, we'll send it to you by mail. Address is no longer correct. More paperwork needed before they can send your account info. Not much can be done over the web or the phone. So is that an issue? Is that you see transferring TSP to a 401k, and so it becomes complicated and people don't do it, and then they lose out. They leave money on the table essentially.
Well, it's much harder to transfer than to change your fund. So if you can log in online, you can change your fund online. And I've done that with people before, like change from the G fund to the S fund or whatever it is.
Something that has a higher rate of a potential higher rate of return. Okay.
Yeah. Now the TSP, it's particularly hard because the expenses on the account are so low because they're cutting every possible cost. Right. So like if you it's not that hard at Fidelity, but the expenses are higher. So you kind of get what you pay for there. I think it was Josh. So I don't have a good answer for you. There's a lot of regulation, and they frankly want to make it hard for you to transfer money because they don't want you. Because if you cash out your TSP or a retirement account before you're 60, you pay taxes on it, and there's a 10% penalty. So they don't want it too easy. Yeah.
Now, so you mentioned credit. And obviously credit, for better or for worse, does have a lot of impact on your ability to borrow. For example, if you do want to get a house or a boat or a car or whatever. I know credit counseling is a pretty in-depth thing, but are there any quick, small things that, any of the veterans or military family members or caregivers or surviving dependents or any business owner really, what are a couple of things that somebody can do to start turning their credit around?
Yeah. Well, so one of the factors is you get points for different types of credit and also for length of credit. So to start turning it around, if you get a credit card that has a $300 limit and you put $50 on it, pay it off every month, technically that helps. It might be a little demeaning for someone that's, making, but it technically helps. Another thing you could do is go to the bank and get an unsecured personal loan, meaning you go to your credit union or bank and say, well, I'm looking to build my credit, and here's, can I borrow $5,000 and pay you back with interest? And even if you pay it back early, you could avoid most of the interest, but it still shows up on your report.
Really? You just take a loan and pay it off, and that helps the credit?
It'll help your credit. I mean, it's a hassle. It's not a magic. I mean, there's
right. Yeah, it sounds like a pain, and then you have to pay maybe even a little interest on it.
Yeah, I feel like I'm kind of the bearer of bad news. I mean, I think the credit system is a little flawed in that way. The other part of it is the part that's valid, in my opinion, is the debt to income ratio. So a lot of times people will have a lower credit score because the amount of their fixed bills is high relative to the amount that they make. That's
Right.
especially hard for small business owners because when you're starting out, you have no idea what you're going to make. You might make 1,000 in 1 month and 3,000 the next, and then you have a loss in month 4. Like, it's just all of it. So banks are like, we want to lend you. Like, if there's one kind of assurance or message, like, it really irritates me when people put enormous corporations and family-owned small businesses in the same category because the experience is so different.
It's a really, really good point.
Yeah. I was working with some clients on navigating all the stimulus package like last spring when it came out. Well, they're talking with me, and we're both just reading government documents, right? Meanwhile, the LA Lakers and Harvard and everybody else, their lawyers were on it like that day. So
Immediately.
immediately they figured it out. What was the question?
Quick tips to help
I don't even
improve
remember.
credit.
We were talking about credit.
And then you were talking about being the bearer of bad news. The way that credit is good and valid is debt to income ratio.
Yeah, that's one thing. And let me pull up a little graphic here. Sometimes.
Yeah, we can do a screen share. We have the technology. While you're bringing that up, folks, as we're kind of rounding third here, I want to give everyone an opportunity to throw any questions or comments you might have about. I mean, we're just rapping about money right now. We talked a little bit about crypto. We talked a little bit about retirement investing. Now we're talking about credit, but like I said, Brett is a pro here. So if you have any questions, comments, concerns, if you want to talk about Aaron Rodgers and whether or not he's coming back to the Packers, I don't know. Like, let's just talk about whatever. I think you can do a screen share on your own by pressing that button at the bottom.
Well, yeah, I'm finding my thing here. All right.
We're gonna try this out for the first time on my end through Streamyard to see if it is possible to have a guest do a screen share.
Entire screen.
We're going to see. It should pop up on mine, and I'm going to approve it. Oh, look, we're on into infinity there. Look at us go.
Whoa.
That's an endless sea of Brett's and Adams. Hey, look at that.
Yeah, so this is a piece. Here's a visual on so this is, talks about like installment loans, revolving credit, so like car notes. This here is probably, irrelevant.
There you go. So for those of you that don't know what builds up your mysterious credit score, there it is.
Yeah. That it basically, my father-in-law, he was diagnosed with stage 4 cancer, like out of nowhere. And this was a couple years ago, and he's better. It's wonderful. But financially, he was a mess. And so he's got bills coming in the house. Nobody knows what's going on. And in talking with an attorney, our attorney basically said, oh, credit card companies are used to not being paid. Which I was like, really?
What?
Right.
Are they really?
Yeah, because they're not going to sue someone that, goes bankrupt or whatever over $1,000 or something like that.
Right.
So I found that really interesting. And I think they know, like, the lender is making a bet that you're going to pay him back. The interest that they charge is based on a calculation of how many people will pay them back and how many people will basically charge more than they can afford. So that payment history and the amount owed are the two biggest amounts. Like, the other ones are lower. So
you can the sad but true answer about your credit score is there is not a easy quick fix or thing that you can do to start making improvements It's basically like if you want to commit to improving it, you are in for a commitment, a long haul proposition of slow and steady improvement, which includes reducing debt, improving your debt to income ratio, not spending more than you can pay for, paying off your credit cards and all that fun stuff. Is that kind of what you're saying?
Yeah, I mean, sometimes, yeah, that is what I'm saying. I mean, Wisconsin's a community property state, so sometimes if your spouse has a better credit score, that can certainly help co-sign on things, right? Because if her score or his score is 790 and yours is 610, that helps, no doubt.
Right.
But yeah, there's really there's no silver bullet. It's there's a conscious, they're talking about energy. And what I have seen in business owners and clients that are successful is you start something, you make a decision, and you stick with it no matter what. That's a really good philosophy. The people that seem to be stuck in this, oh, is this going to work? Are always chasing the next shiny object, whether it's crypto or not. So my response to should I buy crypto is like, well, are they looking for a quick fix, or are they saying, oh, this is an exciting opportunity, maybe I could benefit from that, but if I don't, I'll still be all right. Those are very different attitudes.
Well, let me tell you a story in that vein. A couple of years ago, when Bitcoin was absolutely taking off, before it went crazy, I was like, you know what, I'm gonna open up a coin wallet and just $50 worth of crypto every month. Why not? And I did it for 2 months, I think, and things got really exciting, and then they died, and I said, nah, you know what, I'm good, whatever. And I cashed out and I said goodbye. Now, had I at that point continued to invest $50 a month every month, we're talking about for a couple years, with things picking up again, who knows what that account would look like had I actually stayed vigilant about that and stuck with the commitment that I made. I could have thousands and thousands of dollars sitting around in Bitcoin right now.
Yeah, I think it was Wayne Gretzky, the hockey player, who said, like, I don't skate to where the puck is, I skate to where it's going, or some version of that.
There you go.
And so
he's got a lot of great quotes.
Yeah. So
he's a philosophical guy for a hockey player,
Right. So I think there's a couple things, and sports are helpful. I think the reason why we like sports and board games is that we can compete and the rules are known to us, right? So we love how Aaron Rodgers can do the things he does in this game where everyone is competing under the same rules. Like he made it look easy. When someone's doping or cheating, we vilify that person, and rightfully so, right? And so because money is all around us, like, it's no different. Like, what I'm passionate about is I want people to understand the rules of the game. To not understand the rules of the game, you're going to make a costly mistake. It's just a matter of time.
Right.
And so, like, I think that's the rules of investing are, like, if you can anticipate where things are going, maybe crypto's that, maybe it's not. But you're right, Adam, if you stuck with it. So my question to you as a client, potential client, someone I'm chatting with, would be, well, what'd you use the $50 a month for?
Something stupid, probably.
Right.
Something stupid, no doubt.
Right. So then if it's like, hey, this is an amount that I can part with, that I can, sort of gamble with, then that's great. If it's like, I'd probably put it extra, I'd probably pay off my credit card or something, well, then you should just do that, because there's going to be advantage there.
Yeah. Interesting. That's all good stuff, man. I feel like we could talk for hours. We're probably going to have you on, you on again. What was that?
Could. I said, yeah, we could.
Good. I mean, there's so much base level financial acuity and financial education, like base level, that a lot of people in our generation just did not get.
Well,
And so, yeah.
yeah, that's probably been the biggest change in the last 20, 30 years is
Mhm.
this kind of dismantling of employer benefits.
Okay.
So even in the 90s, the 80s, certainly the 70s, people had awesome health insurance. They had pensions. It was like, hey, you
I
work here,
did employer,
you
right?
work here for a long time and we'll take care of you. And that's that. And now that's not the case.
Yeah, it doesn't exist anymore.
Right. Yeah, sorting through that for sure is important.
Yeah, it's more important than ever for us to look out for our own financial futures and to invest in our future and plant the seeds that will bear fruit in the
Hmm.
long term for us and our families, because unless you work for the state or a federal gig or something, you don't have a pension. You're on
That's
your
true.
own.
That is true. Yeah.
So, well, Brett, I sure appreciate your time today. It doesn't look like we have any questions. Sometimes we have questions on the show. Sometimes we have a heap of questions, and then
Yeah.
sometimes we just, get a comment or whatever. It looks like we were answering everybody's questions today, so nobody had any follow-up stuff. So,
Hmm.
appreciate your time, Brett. I'll ask you to hang on the line just for a second here.
Sure.
All righty. That was a lot of great information in there. Um, I won't bore you with a recap. Scroll back and listen to that again. If you don't have a base level knowledge about those small things that you need to do daily to build up a set of habits, to be vigilant about your saving and your investment and whatnot, you need to work on your financial literacy. It's important. It's part of your health, your overarching health and wellness is your financial literacy is very important. And if you need help, YouTube videos are great, but talk to a financial planner, talk to a trusted advisor like Brett. And I know he's available, have his contact information out there as well, but talk to somebody that you trust to help you invest in your future. Cause like we said, man, I mean, unless you're in a rare gig that still has a pension, it's just, you're on your own. And I don't want any of you breaking your backs working until you're 80 years old. Give me a break. You got life to live. Live like no one else does now so you can live like no one else does later. Let all the other financially illiterate people break their backs at 80. You got a retirement to enjoy and a future to invest in. I believe in you. I appreciate y'all tuning in. We will see you next week. Same time, same places, 11:30 a.m. Central on Wednesday, Facebook, LinkedIn, YouTube, and Twitch. Y'all have a great week.